Good Friday morning. It's June 4th, and I'm Kenny Polcari, host of the party, morning market commentary, everything you need to know. So let me start this off by just telling you, I will be live and in color today for the hour from 9 to 10 a.m. this morning with Stuart Varney on Varney & Company on Fox Business. Be sure to tune in as we chop it up. We're going to chop it up about the non-farm payrolls report and employment and inflation and Joe Biden's tax policy and anything else you want to talk about. The meme stocks at AMC. It goes on and on and on. So be sure to join us. So what happened yesterday? The markets continued to churn as they wait for today's NFP data. Remember, yesterday we got the ADP data. It was stronger than expected. Are we going to see the same repeat performance today with the NFP? Techs are under pressure again. Is that telling us anything at all? The Fed remains divided on the next move, so we'll see if today's report changes the thinking at the Fed. Oil is now trading at $69.10, up and through, on its way to 70. Hello, what have we been talking about? It's going to be there before the 4th of July. Bitcoin, Ethereum, and Dogecoin all trading lower this morning. And what are we having for dinner? We're having the mustaccioli rigati with red onions, arugula, and cannelloni beans. And if you want to keep it vegetarian, you have it that way. If you want to add some meat to it, you can grill some sausage and slice it up and toss it right in the pan. It's delicious, but we'll get to that in a minute. So what happened yesterday? Stocks finished lower. Although the major averages, all of them, finished off their lows of the day, right? They got really slammed early in the morning, and then they managed to make their way back, although they still all ended lower. The Dow lost 23 points, the NASDAQ giving back 142 points, the S&P off 15, the Russell gave back 19 points. Value once again outperforming growth. That's a theme we've been talking about. It'll be a theme for 2021. Should be no surprise. The FANG M stocks, right? Facebook, Apple, Amazon, Netflix, Microsoft, they got slapped while the tech disruptor names got absolutely smacked. The Cathie Wood ARK ETF losing 3.5% yesterday as investors are choosing to hit the sell button as they await today's data, right? The meme stocks largely came up for sales. Jeffrey halting a short sale trading on some of those names, and you know who they are. All this while AMC's CEO Adam Aron comes out and tells everybody, do not buy my stock unless you are prepared to lose all of your money. This after we saw a 96% surge in the stock and the company filed to sell an additional 11.5 million shares. So there's going to be lots of talk about what's going on about AMC. We saw it was down about 35% early in the day. They rallied it back and ended the day down I think 10 or 11% this morning. It's under a little bit of pressure, but that's going to be part of the conversation everyone's talking about. We saw weakness in consumer discretionaries, tech, communication services, all trailing, right? We saw energy, financials, even utilities all outperforming. And the utilities one is an interesting one because that's really the defensive play. Certainly energy and financials are a cyclical recovery play, so that all kind of makes sense in that theme. Treasuries were a little bit weaker, sending yields to 1.62%. The dollar rallied a little bit. Gold finished down about 1.9%. And West Texas Intermediate Oil did end the day fractionally lower. But this morning, it is surging and trading up through $69. The market continues to trade in this very tight range, like 7 sessions of really not too much activity as this push and pull continues. And everyone attempts to decipher what is the next move for the Fed. Considering all these high-profile themes that we've been talking about now for weeks and will continue to talk about in the months ahead. Yesterday's focus was clearly on the employment number, ADP. They came in with a number of 978,000 new jobs versus the expectation of 637,000 new jobs, right? Initial claims. They fell below the 400,000 mark at 387,000. That's very, very bullish. Yet continuing claims continue to remain at 3.6 million, which is confusing, right? The ISM, non-manufacturing, which is really the services index, surged to 70.1, and that is also key that people need to understand. The U.S. economy is a 75% services economy. So as that number increases, that just reflects the recovery, the robust recovery. So that's actually a very, very positive number. So again, what are we going to see today? Joey comes up and offers a new idea. Instead of pushing the corporate tax rate to 28%, he wants to leave it at 21%, but He now wants to put in a 15% floor. So there's an alternative minimum tax on everybody. They've got to pay something, and he's starting with 15%. So it would be 15% to 21%, right? So that's an interesting thought. I actually don't really have a problem with that. I like the idea that everyone's going to pay something. It is frustrating to see quarter after quarter, you see some of these big name companies earning billions of dollars every quarter, billions, multiple billions, hundreds of billions, and you know who I'm talking about, every quarter, who then turn around and say, oh, well, we didn't pay any taxes because, we're a growth company, we got all these expenses, and we're not paying any taxes. And that is baloney in my mind. So I do agree that everybody should pay something, and you should get some of these big companies that pay something. So it's going to be an interesting conversation, certainly in the months ahead. Politico is reporting that they expect the Republicans now to come back to the table and raise their offer versus Joey's $1.7 trillion spending plan. So we'll see how that goes. However, both sides do remain fairly far apart on a range of other issues, and the Democrats are still threatening to push us all through via reconciliation. So we'll see how this unfolds. And while it's not going to necessarily price stocks in the short term, all that news will certainly create kind of angst as there's speculation about what it really means. So just pay attention. Yesterday we talked about how the Fed announced that they're going to begin winding down its corporate bond facility that they instituted at the beginning of COVID, stressing it has nothing to do with the overall monetary policy decisions, and nobody should read anything into it. New York Fed's Johnny Williams coming out saying that he doesn't think we're far enough there yet, that substantial progress has not been made. So everything should remain status quo. While once again, Fred's Kaplan, Dallas Fed President Kaplan, comes out and says the tapering should absolutely begin. We need to have this conversation. It should begin. So again, there's just more confusion. But maybe that's the point, right? Keep everybody confused and on their feet, not really knowing which to do. So this morning at 8:30, we're getting May non-farm payroll report. Expectations, I told you, for 674. But remember, last month was a disaster. They were expecting 1 million jobs. We got 287,000. So are we going to see a boomerang reaction this month? Are we going to see a revision to last month's number plus an additional outperformance in today's number? That's going to be very, very interesting, because then what will that say about the condition of the labor market, the condition of employment, and what the Fed may or may not do? Next Thursday, we're getting CPI. That's next Thursday, so it's about a week away. But the expectations for year-over-year changes in CPI are up 4.6%. That reflects the rate of inflation. 4.6% is what that number is expected to be year over year. So that's a very strong number. And some will question, does that really suggest that inflation is transitory? Once again, though, you have to remember, let's be fair, you're comparing that against a number a year ago that was artificially lower due to the closure of the economy. So there is a little bit of wiggle room in there, but the number right on the face of it is a little bit shocking. So we'll see how the market reacts. U.S. futures are flat this morning at 5:30 as everyone awaits the payroll data, right? They actually didn't do anything. Dow futures are off 35. The S&Ps are flat. The NASDAQ's flat. The Russell's flat, really not doing anything. Treasuries are still yielding 1.62%, so they're holding steady. The dollar is trading just north of 90. Okay, not a big deal. Doesn't tell you much. Gold's down another $2, trading now at $18.71 an ounce. But oil is the big story and continues to be the big story as it now surges up and through $69. This morning is trading at $69.10, on its way to $70 as the world opens up. The summer's here. Demand is up. Don't anybody think that demand is going anywhere. It's not, right? People are driving. People are flying. Truckers and shippers moving products around the world. This all demands energy, and it's not going away. So expect to pay higher prices at the pump in the weeks ahead. European markets are also teasing just a bit lower this morning as they await U.S. payroll data and then what that says about the U.S. economy. But Eurozone retail sales data declined by 3.1% versus the expectation of a decline of only 1.7%. So that was worse than expected, and that's kind of holding investors back a little bit as the markets across the region all churn a little bit lower, off about 1/4 to 0.5%. Like I said, Bitcoin's down 4%, trading at 36,000. Ethereum's off 6%, trading at 2,600, and Dogecoin's down 5%, trading at 36 cents. The S&P closed at 4192 last night. breaking the 4,200 psychological barrier after having tested it 3 times in as many days, right? It traded as low as 41.68 yesterday before it found any support at all, rallied back, but still ended the day below 4,200. And, you could say the third time's a charm, right? Because we tested 4,200 3 times in 3 days. And so the third time it failed and it did not hold and we broke through. And so some people would welcome that. I, on the one hand, am welcoming a weakening market because, I've been wanting to put more money to work, as have a lot of people. So I like the fact that the market's backing off. And I've been talking about this anyway. I've been telling you that the market feels a bit tired. It feels a bit extended. We need to have some consolidation. We need the market to kind of pull back and shake the branches again, right? So it all depends upon your perspective. But if you're a long-term investor, absolutely you should be welcoming this weakening in the market. The weakening doesn't mean it's going to fall out of bed at all. It just means that you're going to get an opportunity to buy some stocks at better prices. So have your shopping list ready, right? Because all those major themes continue to be the supporting actors, right? So it's inflation, it's the interest rates, it's monetary policy, it's the Fed, it's the government infrastructure program. All those conversations will continue to provide noise around the market. So you just need to stay focused, stick to the plan. Remember, you know what you can do? You can text the word invest to 21,000 to get my digital business card. Feel free to download it, text me, email me, give me a call. I'm happy to talk to you about it. You can follow me on Twitter at Kenny Bolkari. And don't forget to tune in to Fox Business this morning from 9 to 10 where I will be appearing with Stuart Varney for the hour. Okay, so what's for dinner tonight? This is a simple dish. You can either have it vegetarian style or you can add sausage meat to it, sweet sausage meat to it, and make it really a delicious dish. But it's mustacholi rigati, which is the mustacholi pasta with the lines in it. You need arugula, cannelloni beans, you need red onions, you need garlic, and you need oil, and you need fresh grated Parmesan cheese. And if you're going to use the sausage, you need sweet Italian sausage. You're going to bring a large pot of salted water to a rolling boil, turn it down until you're ready to put the pasta in. In a big saute pan, you want to add the oil. So go around the pan 2 or 3 times, add the oil, heat it up, add the crushed garlic. So crush it with the side of the knife and then rough chop it, put the garlic in there. Add the sliced red onion. This is red onion, not white onion. The red onion just gives it a different flavor. You can use white onion if you want. I like the red onion in this dish. So slice the red onion. Put the red onion in the pot in the saute pan with the garlic and the oil. Saute it around just like you would. Saute the red onion until it gets nice and soft and translucent. It's probably 6 or 8 minutes like that. You don't want to burn it, but you just want it to get soft and translucent. When that's done, you want to add the can of cannelloni beans, water and all. Open the can, just dump the whole thing right into the saute pan, right? And so let it all come together. Keep the heat on kind of medium high. Just be careful, don't burn it, right? After you warm those up, because the beans don't need to cook. They're good to eat right out of the can like that. So you just want to really warm them up. So after about 4 or 5 minutes, you're going to toss in the arugula. The arugula is going to wilt, not a problem. So, you can put a bunch in because it wilts down and so it gets down and everything. So, make sure you put a bunch in. In the meantime, you've added your mustacholi to the pot of water. You're cooking that. That's going to cook for about 8 minutes because you want it to be al dente. And then once the pasta is done, you're going to strain it, reserve a mug full of pasta water, add the pasta right to the big saute pan with the cannelloni beans and the arugula, toss around so it gets all coated. Take a big handful of fresh grated Parmesan cheese, put it right in the pan, toss it around, and if it looks like it needs a little bit of help, like if it looks like the pasta sucked up all the juice that was in the saute pan, remember, take a little bit of the pasta water that you saved, just add a little bit at a time. So you don't want to make it sopping wet, but you want it to be moist, right? So just add a little bit at a time, stir it around, taste it, season it with salt and pepper just to taste it, make sure it's all good. Now, you can serve it just like that. And that's the vegetarian version. It's delicious. You're never going to go wrong. But if you want to add sweet Italian sausage, you can do it. You can easily do it. The way I would do it is I would grill this sweet Italian sausage on the grill. I'd cook it up nice. I'd bring it in the house and I'd slice it just into bite-sized pieces. You know what to do. Slice the sausage into bite-sized pieces. I would add the sausage to the saute pan before I put the pasta in. Let it all mix with the beans and the arugula and the onions and the garlic. Just, it's already cooked, so you just need to mix it. And then I would put the pasta and the cheese in and I would serve it that way. So you can eat it both ways. Both ways are really, really delicious. You're not going to go wrong with this meal. It's a simple dish. It takes you, if you make it without the sausage, honestly, it takes you 15 minutes, 20 minutes max to make. Everyone will enjoy it. Just make sure you got plenty of cheese on the table afterwards, because you know me, I love my cheese. In the meantime, it's Friday. The day's about to begin. Sit down, strap in, take good care, and I will see you on Monday.